Hey investors, Money Mindset here. Listen up, because we're diving headfirst into the electrifying world of AI investing. It's red hot, folks, hotter than a four-alarm fire, and everyone's trying to get a piece of the action. But hold your horses. Before you go throwing your hard-earned money at every algorithm with a fancy name, you gotta know the pitfalls. That's right, the mistakes that can turn your AI investing dreams into a nightmare. We're talking about protecting your hard-earned capital and squeezing every last drop of profit out of this incredible market. And believe me, there's a lot of profit to be made. But you gotta be smart, you gotta be strategic, and you gotta avoid the mistakes that trip up so many investors. That's what we're breaking down today, folks. The 5 AI investing mistakes you absolutely must avoid. We're going deep, we're getting technical, and we're giving you the knowledge you need to conquer this exciting frontier. So buckle up, get ready to take some notes, and let's make some serious money. Forget everything you thought you knew about investing, folks. The game has changed. AI is here, and it's not just some futuristic fantasy, it's the real deal. We're talking about sophisticated algorithms crunching numbers faster than you can say buy, buy, buy. These AI-powered systems are analyzing mountains of data, spotting trends, and making predictions with laser-like precision. They're like the Warren Buffetts of the digital age, but they don't sleep, they don't take vacations, and they're available to you 24/7. Now I know what you're thinking. Jim, this sounds complicated. And you know what? You're right, it can be. But don't you worry your pretty little heads, because that's why I'm here. We're gonna break it all down step by step so you can understand the ins and outs of this revolutionary approach to investing. We'll talk about the different types of AI investing strategies, the risks and rewards, and how to choose the right tools for your financial goals. Because here's the bottom line. Folks, AI investing isn't going anywhere. In fact, it's only going to get bigger, bolder, and more powerful. Those who embrace it, who learn the ropes and avoid the pitfalls, will be the ones reaping the rewards. And those who bury their heads in the sand, well, let's just say they'll be stuck in the financial Stone Age. So, are you ready to join the AI revolution? Are you ready to supercharge your portfolio and ride the wave of the future? Then stick with me, because things are about to get very, very interesting. Alright folks, before we dive headfirst into the exciting world of AI investing, we gotta make sure you're properly equipped. Think of it like preparing for a climb up Mount Everest. You wouldn't just show up in flip-flops and a tank top, would you? First things first, you need a solid foundation in the basics of investing. We're talking about understanding things like stocks, bonds, diversification, and risk tolerance. Don't worry, you don't need a PhD in finance, but you gotta know the ABCs. Next up, you're gonna need access to an online trading platform. This is your command center, folks, where you'll be executing trades, monitoring your investments, and interacting with those AI-powered tools. Now, there are a ton of platforms out there, each with its own bells and whistles. Some are geared towards beginners, while others are designed for seasoned pros. Do your research, compare features, and choose the one that best fits your needs and experience level. And here's a hot tip. Don't be afraid to start small. You don't need to pour your life savings into AI investing right out of the gate. Dip your toes in the water, get a feel for the market, and gradually increase your investment as you gain confidence and experience. Remember, knowledge is power. The more you learn about AI investing, the better equipped you'll be to navigate this exciting new frontier. So, do your homework, ask questions, and don't be afraid to seek guidance from experienced investors or financial advisors. All right, investors, it's time to get real. We're diving into the 5 AI investing mistakes that make me want to pull my hair out. These blunders can sabotage your portfolio faster than you can say margin call, so listen up and learn from the mistakes of others. Look, I love a good algorithm as much as the next guy, but even the most sophisticated AI can't predict the future with 100% certainty. The market is a wild beast, folks, and unexpected events can throw even the smartest machines for a loop. Don't be a sheep. Use your own judgment, do your research, and don't be afraid to question the algorithm's recommendations. Remember those risk tolerance questionnaires you probably skimmed through when setting up your trading account? Well, they're not just for show. AI investing can be incredibly powerful, but it can also amplify your losses if you're not careful. Define your risk tolerance, set stop-loss orders, and diversify your portfolio. Just because an AI-powered strategy crushed it last year doesn't mean it's guaranteed to do it again. Past performance is not an indicator of future results. Focus on the fundamentals, understand the underlying logic of the algorithm, and don't get seduced by flashy marketing materials. One of the biggest advantages of AI investing is its ability to remove emotion from the equation. But here's the catch: you gotta let it. Constantly tweaking your portfolio, chasing every little market fluctuation, and letting fear or greed dictate your decisions will only sabotage your long-term returns. The world of AI is constantly changing, with new technologies and strategies emerging all the time. What worked yesterday might not work tomorrow. Stay informed, keep learning, and be willing to adapt your approach as the market evolves. All right, folks, it's time to bring those AI investing mistakes to life. We're going visual in this chapter, using charts, graphs, and real-world examples to show you the devastating impact these blunders can have on your hard-earned money. Picture this: you're riding high, your AI-powered portfolio is soaring, and you're feeling like an investing genius. But then, bam! The market takes a sudden downturn, and because you blindly trusted the algorithm without any risk management, your profits vanish faster than a plate of cookies at a Weight Watchers meeting. Or how about this? You see a flashy ad for an AI investing tool that promises guaranteed returns. You throw caution to the wind, ignore the importance of due diligence, and pour your life savings into this sure thing. But guess what? Past performance is no guarantee of future results, and you end up losing your shirt. We'll be dissecting each of the 5 deadly sins of AI investing, showing you exactly how they can derail your financial goals. You'll see the difference between a well-managed, diversified portfolio and one that's overly reliant on a single algorithm or strategy. The goal here isn't to scare you, but to educate you. By understanding the potential consequences of these mistakes, you'll be far more likely to avoid them and make smart, informed decisions with your money. So, get ready to dive deep into the numbers, visualize the impact of your choices, and learn how to protect your portfolio from the pitfalls of AI investing. All right, investors, we've covered a lot of ground today. We've explored the exciting world of AI investing, exposed the 5 deadly sins that can sabotage your returns, and visualized the impact of those mistakes on your portfolio. Now it's time to arm you with the knowledge and strategies you need to succeed in this rapidly evolving market. Don't think of AI investing as a complete replacement for your own knowledge and judgment. Instead, view it as a powerful tool to enhance your decision-making process. Combine the insights of AI-powered tools with your own research, analysis, and understanding of market trends. Don't go all in on AI investing right out of the gate. Begin with a small portion of your portfolio, experiment with different strategies, and gradually increase your allocation as you gain confidence and experience. Don't put all your eggs in one basket, especially when it comes to AI investing. Spread your risk across multiple assets, sectors, and strategies. This will help protect your portfolio from sudden market swings and the potential shortcomings of any single algorithm. The world of AI is constantly evolving, so it's crucial to stay up to date on the latest trends, technologies, and best practices. Read industry publications, attend webinars, and engage with other investors to stay ahead of the curve. If you're feeling overwhelmed or unsure about how to get started with AI investing, don't hesitate to reach out to a qualified financial advisor. They can help you develop a personalized investment plan, choose the right tools, and navigate the complexities of this exciting new frontier. There you have it, folks. We've journeyed through the exhilarating highs and potential pitfalls of AI investing. Remember, knowledge is power, and by understanding the 5 common mistakes we've discussed, you're already ahead of the game. Now it's time to take action. Don't let this valuable information go to waste. Apply what you've learned, start exploring the world of AI investing, and watch your portfolio soar to new heights. And remember, the market waits for no one. I'm Claudia Myers, and I'll see you in the next video, where we'll delve deeper into advanced AI investing strategies. Until then, happy investing.